Most business owners look at profit and loss statements but still feel confused. The numbers are there, yet the story behind them feels hidden. Revenue looks good, expenses seem normal, but cash feels tight. In this video, you will understand all about business profit and loss with practical examples. First, understanding your business through simple numbers. Think of a profit and loss statement as a story of how your business behaved over a specific time period. Let us imagine a small service business in the United States. Over 1 month, the business earns revenue of $50,000. That number alone feels great, but revenue is only the opening line of the story. The real meaning starts when we ask where that money came from and where it went. Out of those $50,000, the business spends $20,000 on direct costs like labor, materials, and subcontractors. This leaves $30,000 as gross profit. Already, you can learn something important. If direct costs rise faster than revenue, margins shrink even when sales grow. Many owners miss this early warning sign. Now the business pays operating expenses. Rent is $4,000, software subscriptions cost $800, insurance is $600, marketing spend is $3,000, utilities are $500, and administrative wages are $5,000. These everyday costs add up to roughly $14,000. Subtracting this from gross profit leaves $16,000 as operating profit. At this stage, many owners think, I made $16,000. But the profit and loss statement keeps going. Interest on a business loan might be $1,000. Depreciation on equipment could be $1,200. Suddenly, profit before tax drops further. Taxes might take another $3,000. What looked like a strong month now ends with roughly $10,000 in net profit. This is why profit and loss matters. It shows that high revenue does not automatically mean high profit. It also shows which costs are fixed, which are variable, and which silently grow every month. When you read your profit and loss like this, you stop reacting emotionally to revenue and start managing your business logically. You begin to see patterns, risks, and opportunities hidden inside normal-looking numbers. Now, why profitable businesses still struggle daily? Now let us go a little deeper, because this is where most business owners get confused. Imagine the same business shows a net profit of $10,000 for the month. On paper, that looks solid. But the owner feels stressed, delays payments, and hesitates to invest. Why does that happen if the profit and loss statement shows profit? The answer lies in understanding what profit actually represents. Profit is an accounting result, not a bank balance. In our example, depreciation reduced profit by $1,200, but no actual cash left the business for that expense this month. On the other hand, loan principal repayment of $2,000 reduced cash, but it never appeared on the profit and loss statement at all. This mismatch creates confusion. Another issue comes from timing. Let us say $5,000 of revenue is still unpaid by customers. It appears as income on the profit and loss statement, but the cash has not arrived. At the same time, suppliers might already be paid in full, so profit exists on paper, but cash feels tight in reality. This is why smart owners read profit and loss alongside cash flow, not in isolation. Profit and loss also reveals efficiency trends. If revenue grows from $50,000 to $60,000, but operating expenses rise from $14,000 to $20,000, the business is growing but becoming inefficient. Marketing might be poorly targeted. Software tools may be overlapping. Staff roles may not be clearly defined. These insights only appear when you compare periods, not when you look at a single month. For United States business owners, profit and loss is also critical for lenders, investors, and tax planning. Banks look at operating profit consistency. Investors focus on margin stability. Tax advisors study expense classification. When you understand how each line impacts decision-making, the statement stops being a report and becomes a control tool. You move from guessing to managing with clarity. Most important, how experienced owners use profit to stay ahead. Once you understand how profit and loss works month to month, the real power comes from reading between the lines. This is where experienced business owners separate themselves from beginners. They do not just ask, "Did I make money?" They ask, "What is changing and why?" Let us continue with the same business. In January, gross margin was 60%. By March, it drops to 52%. Revenue still looks healthy, but something is quietly shifting. Maybe suppliers increased prices. Maybe discounting became common to close deals faster. Maybe overtime costs increased because systems are weak. None of these problems shout loudly, but profit and loss reveals them early. Another hidden insight comes from expense behavior. Fixed costs like rent and insurance stay stable. Variable costs like marketing, shipping, and contractor payments move with activity. If fixed costs start behaving like variable costs, such as admin wages rising every month without revenue growth, it signals structural inefficiency. If variable costs grow faster than sales, pricing or process problems usually exist. Profit and loss also helps you test decisions safely. Imagine you are planning to hire a new manager at a salary of $6,000 per month. By looking at your average operating profit trend, you can quickly see whether the business can absorb this cost without killing margins. Without this view, hiring feels emotional. With it, hiring becomes calculated. For United States business owners, profit and loss is also a protection tool. Clean, consistent statements reduce audit risk, support credit approvals, and make due diligence smoother during partnerships or exits. Investors trust businesses that understand their numbers. Lenders prefer borrowers who can explain margin changes clearly. Most importantly, profit and loss builds confidence. When you know exactly how revenue turns into profit, fear reduces. You stop reacting to slow weeks and stop over-celebrating high sales days. Instead, you focus on trends, systems, and sustainability. That mindset shift is what turns a struggling business into a stable one long before revenue becomes massive. When used with tools like accounting software, monthly comparisons, margin tracking, and basic forecasting models, profit and loss becomes actionable. You can test pricing, control expenses, plan hiring, and connect financial results directly to operational decisions with far more accuracy.